good old Wally World reported some juicy earnings on the 14th. Juicy earnings before the market opened. And since then, we'll take a look at what's going on here. So obviously we see shot up quite a bit, but since that high, down 4% since then. So such a positive initial reaction, but what happened since? So let's look at that earnings report, and that's some darn good numbers just from looking at it. EPS is $1.16 per share, beat by 7 cents per share. On a GAAP basis, they beat by 5 cents. $1.15 per share, not bad. Revenue of $128 freaking billion. That's a lot of freaking $1 billion. That's in line with estimates, up 2.5% year over year. Again, as I mentioned several times, the percentage sometimes seems low for people, but overall, 2.5% is massive for a company's growth of this size. $128 billion. I mean, it's very hard to grow that by 50%. You really, it's not possible. You're going to be stuck to these lower percentage gains because it's so hard. I mean, where are you going to get that significant amount of extra money? You don't. Once you've reached this top echelon, as Walmart has, it's hard to grow. But they still are growing at a good pace. 2.5% is fantastic for them. And one thing to note, obviously, regarding Walmart is, as the world's biggest retailer, it's important to look at this for not only the whole retail segment, but also you can look at it for just economic status. Obviously, if we're showing good earnings here, good revenue, and good profit, it's a good sign for the economy as well. Even if it's Walmart, which, again, is somewhat of a recession-proof business. People are always going to be shopping at Walmart no matter what. Whether you're rich, poor, you're shopping at Walmart. Walmart reports comparable sales increase of 30.2% to top the estimate of 3.1%. Transactions were up 1.3%. Average ticket price was 1.9% higher. So all growth there. That's fantastic. International growth up 1.3 to 29.2 billion. Cool. Sam's Club sales were up 0.6% versus a 1.8% consensus. So not that great in terms of Sam's Club sales there, but again, it's the lagging business attached to them that is, just a Costco wannabe. So Costco does it better. So we'll see if they can learn from it. E-commerce sales shot up 41%, which is fantastic. They've been consistently doing e-commerce sales of 30% plus every single quarter, and that's fantastic. And a lot of that, as I mentioned here, is grocery business, and most of that came through the now delivery of groceries that they offer from associates, as well as their online pickup services. Big push for them. Very, very, very helpful for them. Operating income fell 5.4% due to a non-cash impairment charge for Walmart International. Flipkart purchase also negatively impacted operating incomes. So, again, nothing significant here, but obviously there's going to be more spending when they boost e-commerce and they keep focusing on that a little bit more. There will be a little bit of a decrease in operating income. So, Walmart expects a slight increase to fiscal year 20 adjusted EPS and a prior outlook for a slight decrease to a slight increase. So, again, this is pretty normal guidance, nothing insane there. Grocery delivery options for 1.4 thousand stores in the U.S. So obviously pretty good results. So the shares went up as a result, but since then tapered off a little bit due to some I guess the fact that this was at an all-time high and just some concerns regarding the price of the stock. One thing to note before looking into the numbers too. Walmart has picked a new CEO for the Sam's Club brand. Their business partner, Sam's Club, has a new CEO after the other one stepped down. So John Furner stepped down, and Now they've replaced him with Catherine McLay, who was previously Senior VP of U.S. Supply Chain since 2015. Not a long time in that role, but I don't know her entire total career, what that totals up to. But let's look at these numbers, see if we got important stuff going on here. I'll try not to pass out during these numbers, but sometimes you do pass out during numbers. So let's get these. Guidance is now expected to increase slightly compared to the fiscal year 19 guidance or adjusted EPS, which is including Flipkart now. Expected to increase by high single-digit percentage range. Love that, and that's excluding Flipkart, which is obviously, you can tell, a business that definitely is not a high profitable business, but again, they're in it for the sales. Expectations for the dilution from Flipkart remain unchanged, excluding a non-cash impairment charge. The effective tax rate is now expected to be in a range between 25 and 25.5. You see this growth in revenue. Nothing super absurd here. Year-to-date revenue of, can you believe this, $382 billion, which is a 1.8% increase over last year's. That's very good for them. Very good for them. That is insane amounts of revenue. And obviously you see a little bit of a decrease in terms of membership and other income year over year. This is something important to note, as well as operating income saw a 4.1% decrease on the year if we're looking year to date. But still, $15 billion take home. That sounds pretty good to me. $15 billion to take home is a good deal. Definitely a good deal, and significant growth in earnings per share, which is fantastic. So they're growing profitability, which is flippin'-tastic. You got to grow profitability. This quarter, the tax rate was a little bit lower than previously, and it is year to date at least. Accounts payable of 49. That would be 49 below at that point. So definitely some cashish that they have to pay out. No doubt about that. High levels of inventories. About $51 billion worth of merchandise and inventories. Operating cash flow. They did not bring in that much cashish this quarter. So year to date, though, $14 billion brought in. In dividends, they see a little bit of a decrease, actually, but that's interesting. Share repurchases year to date up 16.1% in share repurchases. This is Walmart. This is for U.S. For the U.S., we saw 1.3% increase in transactions and 1.9% in ticket. Profit decreased and expense rate decreased. So that's pretty good numbers for the U.S. Pretty good, definitely pretty good numbers for the U.S. Net opening of one supercenter, remodeled nearly 150 stores. Something to mention, obviously, everything's going to be going to everything will be going to a supercenter. There's very few that aren't supercenters at this point that will all be turning into Walmart supercenters, so you get everything there. Because why not? Grocery saw a mid-single digit comp. Health and wellness saw a mid-single digit. General merchandise saw a mid-single digit. That's pretty cool. So for the international aspect of it, pretty interesting here. They got some interesting numbers. Decrease in profitability, increase expense rate, operating income, pretty big decrease as well. Positive comp in 7 of the 10 markets, including Mexico, Canada, and China. So you got Walmex, which is Mexico, 3.1% increase in sales. China, 3.7% increase. That's fantastic. Canada, increase but decrease in transactions and ticket price increase. And the UK was a little bit lackluster. little bit lackluster in terms of that. Yeah, that's some lackluster stuff right there. So this is the Sam's Club aspect of it. Typically, we're gonna look without fuel in there as typically the metric that they'll want to look at. So a 0.6% increase in terms of those net sales. Ticket decreased in terms of how much, per ticket decrease in terms of that. And transactions were up 5%. So that is a good factor there, but obviously revenue not nearly as much up because of that decrease in ticket price. Profit rate decreased, and membership income up 3.1%, which is good. Trends in membership continue to improve compared to last year. The total number of new members, overall renewal rates, and renewal rates for Plus members all increased. So their membership, good to see that increase. Inventory increased 0.5% to support sales growth. So more inventory makes sense. For them, fresh freezer cooler is really their main focus right now. Fresh freezer cooler is the number one priority for them. So an increase of mid-single digits. Grocery and beverage saw increase in mid-single digits. Consumables up mid-single digits. Home and apparel low single digits. We saw technology, office, and entertainment decreased by low single digits. Electronics obviously taking a little bit of a hit there. Health and wellness increased by low single digits. So definitely some important things to look at there. And as I will tend to look at, I love looking at things. So we love looking at numbers, and guess who's gonna look at numbers? So let's get into some of the good stuff here. Let's get into some of the good stuff. Let's see. Let's keep on going here until I get what I really want to see, which I love seeing things. Obviously, there's some good data there. Oh, I didn't get to see the good things. I missed the good things. Well, regardless, Walmart they posted a good quarter. I hope you enjoyed this, and if you shop at Wally World, don't be too ashamed to say it. We all shop at Wally World now and then. You got to do what you got to do. Cheap stuff. It's nice. It's nice, and it's easy. It's easy stuff. Let's go.